Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, a firm day for the bulls with investors, with the market sustaining the opening gains that we had seen ahead of that critical US monetary policy outcome tomorrow. While there was caution yesterday, it seems like there was a bit of cause for optimism in the market today, also thanks to the sort of rally that we saw at Wall Street overnight. If you look at the Nifty and Sensex at this point of time, they are looking quite firmly, set to end the day on a higher note. Also, we saw broad-based buying because even in the mid and small cap space, which were actually outperformers yesterday as well, you are seeing very solid amount of gains. As far as the bond market is concerned, the Indian bond market did see gains today. Indian bond yields, 10-year benchmark bond yields did fall on the back of that lower than expected CPI number that came out for the month of November last evening. Now, of course, going ahead, today also there's a very crucial data point in the US, a very critical data point in terms of the US inflation numbers for the month of November that is going to come out. And expectation is that it will come in the range of about 7.3% as against 7.7% that we saw for the month of October. Now, the word out there is that if we do get a print below 7.1%, Santo, people are expecting a mega short covering rally on Wall Street, which generally will also be quite positive for us, because if you do get a reading below 7.1 or 7%, then that will really strengthen the case of the market that maybe the Fed need not, raise rates as much as it has been indicating to everybody so far. But if we do get a number above 7.3, then that will make the Fed victorious and the market wrong, and that is where you could see a lot of losses coming into the market. So it's almost like a game theory right now. It's almost become a binary event in that sense, the inflation number this evening, all actually in a way, taking away the limelight from the actual Fed policy meeting tomorrow in the evening. So
it's just a 20 basis points which could be a make
or
break.
Absolutely. I mean, that is the situation. Exactly, that is the situation right now, and just goes to show how expectations can change just because of those tiny 10 basis point or 20 basis point with almost trillions of dollars on the line.
Well, I would think, CJ, we are likely to see this rally continue at least for the rest of the month, because that's December typically has been a very strong month for equities, more so in India, given that most foreign fund managers go on vacation, foreign institutional activity tapers down significantly. So that is enough to keep markets
volumes
buoyant.
Also come down, so therefore price movements generally
and this has been in the case for many years now, and I doubt if it's going to change in
I take my word. I think I was trying to call out a few of them, but none of them were picking up my call, so it's very much likely they're already out on their holidays, Christmas holidays, with their families.
So when the fund managers are away, the operators shall play. That's been the mantra, and I think we're going to see it this time also. Quick check on the FNOQs. Now we are seeing build-up of long positions in futures of Tata Communications, MCX. Interestingly, in fact, things have been looking up for that stock over the last month or so, ever since the second quarter numbers were better than expected. We're also seeing long build-up in futures of LIC Housing Finance. Now we're seeing a short build-up in the futures of Dr. Lal Pathlabs, Laurus Labs, and interestingly Dalmia Bharat, which till yesterday was ruling quite firm, but I think now that the news is out, probably just seeing the buy on rumor, sell on news.
I think market was a little disappointed from the lack of hype that analysts were showing for the deal, and clearly it seems like analysts were raising more questions than actually pointing out the benefits from the deal to acquire those cement assets in middle India or central India. That said, of course,
just before we move on to that, you had some interesting observation on Dr. Lal Pathlab, the reason for the weakness.
Yeah, that is also true. Of course, Dr. Lal Pathlabs, thank you for reminding me that, Santo. Of course, the stock was quite weak today, largely because of the, the move made by Delhi government, wherein the Delhi government has now made almost 400 to 450 tests free of cost for the people of Delhi, or those citizens who are residing within Delhi. Earlier there were about 200 tests wherein citizen could walk in to a diagnostic lab and get that test done for a free of cost. But at this point of time, because of the increase in number of tests, and given the fact that Dr. Lal has a very large presence in the Delhi NCR market, a lot of investors are reading that quite negatively. They believe that this could possibly be a major negative as far as earnings are concerned going ahead. Also, let's not forget that the diagnostic space in itself is seeing so much competition. Margins have been under pressure, and this, is just basically, it's basically a case of when it rains, it pours sort of a situation for Dr. Lal Path Labs.
Well, I didn't know, CJ, there were almost 400 to 460 tests.
Absolutely. I just took a basic, health check test the other day, and the diagnostic lab prescribed me 60 tests overall. God. Just a normal, full body checkup involves 60 tests. So I can't even imagine what it will be if you were to take a proper full body check, which probably involves almost 100 and 120 tests. So yeah, that is the situation right now for Dr. Lal Path Labs, and clearly you can see that in the short build up that we are seeing on the counter today.
And with that, we move on to the stocks on our watch list this afternoon, beginning with macro tech developers. Now, CJ, interesting stock. This steady improvement in fundamentals. Overall outlook on the sector has also been quite buoyant, but you've not seen the stock perform for quite some time now. And this despite the fact that it's been doing probably all the right things, bringing down its debt. Balance sheet is in a much healthier state. CJ, what I think is probably the QIP which they have just concluded at 1,022 rupees odd per share, that in the short term could probably weigh on sentiment. Typically, it does happen that whenever there's a fresh issuance of shares, that always there's a overhang, that supply which tends to keep fresh buyers away. But the management, however, is quite upbeat on the business prospects. In fact, Abhishek Lodha, MD and CEO of the company, was on the CNBC TV 18 channel a short while back, and we're seeing a good the sales buoyancy in both residential and office space continuing in the quarters ahead also. Not so much on office space, where he sees that probably the global the issues at the global level could probably affect demand to some extent, but on the residential segment he's pretty upbeat and sees a 20% compounded growth next year as well. And it made an interesting point there, CJ. He said that it's not high interest rates that are dampener for home sales. He says that basically it more than interest rates, property purchases is guided by the rate of creation of jobs in the economy.
True. That is true, and I think we have seen that always that Santo, if the only last time that we saw a real estate cycle, a bull cycle in the Indian economy, that was also coinciding with the IT job creation boom that we had seen in the middle part of the 2000s. So I think whenever there is an increase in job creation, generally because people's outlook towards their future income also improves, because they know that they can probably get a raise, a higher raise in the year ahead. Generally that also motivates them to buy or accumulate assets. And of course, given that we are Indians, we generally want to own hard assets, physical assets. The money tends to largely go into residential property or your golds, and of course a lot of that is changing with a lot of money coming into equities, but residential property or owning a home always has remained a key thing for Indian households. When the outlook on the income front improves, clearly I think you are willing to pay that extra 100 basis point of interest rate as far as EMIs go. But as far as I think macro tech is concerned, I think, Santo, one reason, as you clearly mentioned, I think the new supply of shares and therefore the dilution that we have seen, I think that has market has taken that a little negatively also, because the money that is being raised from this will directly go to the promoters, if I'm not wrong. I think it will not be coming inside the company. So therefore any prospects of reducing the company's debt further or utilizing that income to actually develop new projects, that is out of the window. So because of that, I think the market is a little unhappy or disappointed by that move. Although from a promoter's point of view, they had to do it because they had to meet the minimum shareholding, public shareholding norm, that is about 25%, 25% right now according to SEBI guidelines. Also going ahead, I think demand at this point of time looks quite good in the residential property market, especially if you look at the Delhi NCR and Mumbai region. I think both of these two major markets are seeing good amount of residential demand, despite the fact that home loan rates have inched up quite a lot over the past 7 to 8 months. Also the cleanup in the balance sheet that we have seen from Lodha, which you also touched upon earlier, that is really a positive, because that gives the company the capacity to borrow more in the future in order to develop the market going ahead. So I think overall this correction while at this point of time may seem justified, I think beyond a point it could create some value for investors out there. Well, the first stock on my radar today is Ahluwalia Contracts from the capital goods space. Now, this stock clearly has seen a very good run in this year in 2022. It has been one of the best performers within the capital goods sector. Now, it is also now fast, becoming a proxy almost in India's capex cycle. Now, there are many companies out there, of course, bigger than Ahluwalia Contracts, but at this point of time, given the 50 years of experience that a company has, and given the fact that the management has seen multiple such capex cycles in the economy, I think that is where the market is betting that the company could do quite well going ahead. If you look into FY23, they are all set to mark the highest ever order inflows that they have ever seen in their history in FY23. So far this year in FY23, they've already seen about 4,000 crores worth of order inflows. So clearly a very, very good sign as far as future revenue visibility is concerned. Also, if you look at the valuation, the stock is actually trading, at a discount to its long-term average, Santo, based on 2-year forward earning. So, given that valuation comfort is also there, and the growth prospects clearly are quite good as far as Ahluwalia Contracts is concerned, I think that is why the stock is likely to see more upside. I think its run is not yet done.
Well, CJ, interesting stock, this one, been tracking it since 2007 when it got listed.
Yeah.
Been quite a roller coaster ride for investors. You've seen multiple cycles there. The stock catches the fancy of the market and then starts coming off quickly. Unless you had the guts to go and buy the stock during the meltdown of 2013 when the stock had fallen below 20 rupees. Since then, it's been almost roughly a 20-25 bagger.
Yes.
But otherwise, if you had been holding the stock for a long time, it's not really delivered or met up to the expectations. So this has been a stock where very cyclical in nature, you need to catch the right cycle. And are things turning at this point in time? Well, FY22 numbers were slightly, that showed a big jump compared to the previous 2 or 3 years when revenues were within a certain band. So even though the order book is pretty firm, and I've been bullish typically on the capital goods sector, again I would say the pace of execution will hold the key whether the stock outperforms or not.
True, Santo. I take your point on that one.
Well, Great Eastern Shipping, the last stock on my watch list this afternoon. Now, the stock is at a record high. Again, those investors who have been patiently sticking out with Great Eastern Shipping finally have some reason to cheer. And this has been one of the consistent dividend payers, a good dividend yield stock for a fairly long
and a very old hand in the market, I believe.
Exactly. Now, but the management here is sounding a bit cautious when it had given an interview to CNBC TV18 just about a couple of days back. Now, what the management has said is that the recession could clearly, right now tanker demand is pretty strong, but a recession could possibly impact that demand. And also shipping is a very cyclical business. So to be able to really make money, you need to buy ships at a time when the prices of ships are also low. And currently the demand is so strong that ship prices too are pretty expensive. So, you have to decide whether you want to go in for an expansion at these prices, which then means that your break-even levels will be quite high. Now, the EBITDA per ship, that is like almost tripled or more than tripled over the last 1 year. So this is right now a sweet spot for all shipping companies in general, but still very tricky on how the company will decide to allocate its capital right now. The stock has almost doubled in the last 6 months or so. I would think that some caution is in order given that things at the global economic level are not looking all that great.
I think, Santo, the only other way, of course, and investors will hope that if the management is cautious about probably deploying that capital in order to buy more ships out there, I think there could be an argument that they may look at returning some of that excess cash that they're holding, given the fact that globally at this point of time there does not seem to be much reason to go on an expansion spree at a time when we are already wondering about, or at least fearful about, a recession in the US as well as a slowdown in the global economy. So there, I think the other way investors could play GE Shipping is probably looking at very healthy dividend payouts and maybe even a share buyback in the coming months and quarters. So I think that is one way to play GE Shipping. But yes, as you mentioned, at least on the fundamental side, I think it looks like the earnings might have had the best run that they could have over the past 2 years when tanker prices have been soaring through the roof. The only caveat here, or the only X factor here, would be what happens to China. If we do see a very rapid recovery in the Chinese economy, then that can help offset some of the slowdown that we might see in the developed economies vis-a-vis the Eurozone as well as the US. So we will have to wait and see how this develops. Probably the first quarter of 2023 will give us more indication on where the global economy is headed. And I think after that, probably if the management does not feel that it needs the cash right now, it may look at giving out higher dividend payouts or even higher cash back, even a share buyback. The last stock on my radar today is Bandhan Bank. Now, the stock was buzzing in trade today quite interestingly because it came to markets' notice that the lender has received about 916 to 950 crores from the government under the government's loan guarantee scheme. Now, this was a scheme that was brought out during the COVID time, Santo, and because, of course, government was government was the guarantor for these loans. Any of those loans that have gone bad, the government had to, step in and pay out to the lenders. So clearly, the Bandhan Bank has received about 916 crores in this quarter, and it's expected to, get another tranche of payments in the coming quarter. So clear from that perspective, wherein analysts were expecting about 2,400 crores in credit cost for Bandhan Bank for Q3. That now drastically comes down to about 1,400 crores according to analysts at BNK Securities. And that is one of the reasons why you're seeing the stock buzzing in trade today. It was higher by almost 4 to 5% at one point of time during the day. Also, Bandhan Bank, of course, let's not forget it's a turnaround story at this point of time. I think it's a bit late in the cycle, but it is a company, a lender, which has got a new management now at the helm. They are trying to steer the ship towards making it less dependent on the SMEs market, the SMEs microfinance market, which always tends to, be a spanner in the wheels for Bandhan Bank. And going ahead, I think if the diversification of the loan portfolio can work out well and their asset quality improves, then this could be one bank to look out for, given that its valuations are quite depressed.
So CJ, I'm glad that you finally come around to my view, because that's something that I had been saying just about a couple of weeks back. Good bounce back by the stock. It's risen about roughly about 20% from its November lows in just less than a month. So the whole play was that, CJ, if you look at in absolute terms, probably it's one of the laggards in the banking sector compared to others. But no valuations now seem to be offering some kind of a comfort, and all the brokerages which have been backing Bandhan Bank, be it CLSA, Motilal Oswal, they've been making the same point that at these levels probably the downside appears to be limited, and also the bank is trying to do a few things. It has strengthened its senior management as well, which means that it will be able to diversify into other areas also, which it had not been able to do so far. So clearly at this point it's more a good favorable risk reward ratio, which seems to be attracting buyers into the stock. But again, CJ, remains to be seen whether people see this as a strategic bet or as a kind of a long-term play.
Yeah, because we have been there as far, when it comes to Bandhan Bank, the market has been there when it's, hoping or betting on a turnaround, and then 2 months down the line something else. Remember these same arguments were being, coming out during February, March earlier this year. Then we had the monsoon, and then we had the Assam floods, and then the entire table turned upside down. So for Bandhan Bank, I mean, it's a very cautious game that you have to play, in the sense that you have to really be very, very, have the penchant to take a large amount of risk on the stock, because you're really not guaranteed that your guess, even if it is as informed as it can be, will turn out right.
Well, and with that, a quick check on the market. The Nifty is up by close to about 115 points. It's managed to retain to most of the game, although the advances to declines ratio is quite narrow, I would say. 1,500 stocks up and about 1,200 stocks down at this point in time. So clearly buyers seem to be shying away from second line stocks.
Yeah, but I think, Santo, they're still holding out quite firm. If you look at the Nifty mid cap and the Nifty small cap 100 index, they're still higher by about 0.4 and 0.5% respectively. So they are almost matching, going neck to neck as far as the large cap peers such as the Nifty 50 is concerned. Sectorally, of course, the disappointment is coming from Nifty FMCG and Nifty Realty Index. The Nifty Realty Index, probably because of macro tech, which is down about 5%, is down about 0.8% at this point of time. The Nifty FMCG down about 0.2%. Among the gainers, you have the Nifty PSU Bank again. The Nifty PSU Bank Index higher by almost 4% in trade. Nifty Bank Index doing quite well, higher by about 0.6%. Now almost on the verge of 44,000. Can you believe it? Santo, I think when I started journalism, Nifty Bank was somewhere around 15,000 or 20,000, and it's already doubled since that level within 7 years. So it's quite good what the run that the banking space is having. and along with IT, which is up about 1.1%, helping the market end the day in the green.
So what are the key things that we should be keeping an eye out for, CJ?
I think, Santo, we have touched upon that earlier in the show. It's the US CPI inflation data for the month of November that will be due later today in the evening. At 6 o'clock, the number will come out, our standard time. So watch out for that. Apart from that, of course, all eyes will shift to the US Federal Reserve's monetary policy outcome tomorrow evening. The two-day meeting began today. It has already begun today, and the outcome will come out tomorrow evening. So our markets will be reacting to that on Thursday. But besides that, nothing much to watch out for.
Well, and with that, we wrap up this edition of Markets with Santo and CJ. As always, thanks for watching.
And guys, keep following us on the social media links that you can see at the bottom of the screen. And for SMA Financial News, stay tuned to Moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.